Welcome back to the Ordinary Millionaire podcast. In today's podcast, I have someone who I think is going to bring a ton of value to you guys. It's Justin. Justin does a ton of interesting stuff in the creative finance space, in the short-term rental Airbnb space. Justin, welcome to the podcast, and I'm really happy to have you on here today.
Thanks, man. I appreciate it. Looking forward to it.
So I usually like to start by just getting everybody's backstory. I know you worked in the, EV world for a long time, and then you sort of branched into real estate. So I'd love to just get a bit of an idea about, what you were doing before real estate, what drove you to get into real estate, and sort of what that path looked like for you.
Yeah, absolutely. So I was an electrical engineer. I spent 18 years in automotive electrification. So worked on EV batteries, motors, inverters, and so on as a project manager. And my wife is an OBGYN physician. So we both had pretty high, time demanding careers. And, over time we had kids like you do. I have a 7-year-old and an 11-year-old now. And, at the time when I was looking for a transition, they were younger and required more of our time. And, leaving the house at 6:30 in the morning to get to work wasn't really jiving with both of our schedules. And so I started to look into real estate, and then specifically short-term rentals. This was in 2020. I was also grounded at my house and couldn't leave, so I was getting a little bit stir crazy. And eventually bought 3 properties from 2020 to 2021 with some capital that I had. And that was fine and great. Launched those properties, had a nice business going, and then didn't do anything really for a couple of more years, and then started to look at getting more properties. But at that point, capital is drained. You're looking for ways of growing a portfolio without spending all your own capital. And so I discovered creative financing in 2023. And that is where essentially the seller finances a portion of their equity in the property. And there's several different structures and ways you can do that. But essentially you're getting the seller to either let you take over their loan or finance a portion of the equity, or both, in their property, and getting an advantageous either down payment or interest rate on that property. So I bought a property in 2023 for zero down, with the seller financing the down payment essentially, plus the closing costs, and realized okay, this is now a scalable business. Now I can grow this business to more properties than just the 3 that I had. And, at that point went full in. So I left my engineering career at the end of 2023, went all in on real estate. My dad actually got sick at the end of that year, so the timing was fortuitous that I was able to spend a lot of time with him at the end of the fourth quarter of 2023. He ended up passing away, right away in January 2024. But just having the ability to spend that time with him was amazing. I drove to visit him at the hospital several times during the week, and got a lot of time in with him. So really the path of my career in real estate, kind of culminated there. And then from that, from then on, I was full in on it. So I ended up buying, that was 4 properties. I bought another 4 properties with creative financing, got really good at the acquisition side of it, which is finding the sellers or the contracts to put these properties under contract with creative financing terms. And then once we got good at that, we realized that was an avenue that we could help other people as well. So we started negotiating these contracts, putting them under contract, and then allowing other people to take over the contract and then buy the property in a wholesale transaction. So that's kind of the high level 10,000 foot view of, how I got to where I'm at today.
Oh, there's a lot to take away there. I think the one thing that I really took away that I think is probably the most important thing is just the fact that you had that ability to spend that time with your father at the end there and just have that time freedom. I think that's, when we're looking at real estate or all this other stuff, sometimes people are drawn to the flashy, expensive cars and nice watches and that. But I think the true value in financial freedom and real estate is having that time freedom and the ability to spend your time with who you want, when you want, and be able to do what you want and not have to ask. If you were working in the corporate world, it's a lot harder to be able to spend that time with loved ones, and get that time off. So that's really what I pulled away from that. So I think that's amazing. I did want to go to that first creative finance property because, I think creative finance it's got a lot of attention in the real estate world right now. Pace Morby, a lot of people are talking about it, and it sounds great on paper, but then of course you also have the skeptics who aren't, a big fan of it, who don't believe it's true. But you're proof that, hey, your first creative financing deal, you said you did it in 2023 and you did 0 down. I'd love for you to just break down that property for the people listening and just sort of let us know, what kind of property was it? What was the purchase price? How did you negotiate those terms, and what are you doing with it now?
Yeah, for sure. So like I said, there's different structures for creative financing. There's, as you mentioned, Pace Morby. He kind of made Subject 2, or his group Sub 2, famous. So Subject 2 is where you take over the existing mortgage from a seller. You start making their payments. Sometimes you give them a down payment. Sometimes you take it over, just paying some basic fees depending on the situation. That's a Subject 2 deal. What I did in that deal that I mentioned, that basically the seller becomes a private money lender in the deal. So if you're looking to scale your portfolio, you might go out and find somebody to invest in a property and give you private money lending so you can get the down payment and whatever improvements you want on the property. You could go and find your grandma or your neighbor or somebody to do that. With this structure, basically the seller becomes that person. So the seller is funding the down payment and they're funding the whatever improvement costs you have on the property. So they're becoming a private money lender in the deal. In exchange, they're getting sometimes a bit higher price. They get an interest rate on their money, on their equity or capital that they have into the property. So a lot of times you're offering them a solution. They're faced with dropping the price, or there's a tight market where they can't sell the property quickly and maybe they need to get out quickly. We've helped people, we've helped cancer patients sell properties quickly. We've helped people going through divorces. We've helped people that are just, done with managing a property. They got into it thinking it was going to be something else and just decided they didn't want to do it anymore. And 2 years later, they're trying to sell their property and it's dropped in value, maybe $100K, and they don't really want to sell it for $100K less than what they paid for it. So that's where we come in. We offer typically an advantageous price for the seller, and in exchange, we give them a note for their equity. So that particular deal, it was in Broken Bow, Oklahoma. It was a 5-bedroom property. Purchase price was, I think, $945, and the seller financed their equity into that deal. So they basically, financed the down payment plus some improvement cost. So I was able to get that property. It's on a 5-year note, so I pay the seller every month an interest rate on that essentially down payment or private money lending. And that note is due in 5 years. So in 5 years, I can either refinance the property, do a cash out refi and pay off the note, or bring some capital into it at that point, depending on how much it's appreciated. And yeah, so that's the basic structure of that deal, where the seller is a private money lender.
And for that property, you still have it in your portfolio today running as an Airbnb?
Yeah, exactly. Yep. That's a short-term rental in Broken Bow. Yep.
And for that property, putting 0 down into it, what are you looking at, making in profit roughly every year on that property?
Yeah, well, I like to say that cash flow scales with the investments and improvements of the property, particularly with amenities, and then secondly with design. So I did put some amenities in that property. I put a barrel sauna in there. I made a game room in that property. So before that, it didn't have really any amenities, and the photos were really quite bad, and it just wasn't marketed very well. Once you make improvements in those other areas, especially the barrel sauna was pretty unique at that time, you're able to boost up the revenue and the cash flow of that property. So I kept most of the furnishings because they were relatively good. We did some touch-ups on the design. We wiped out everything in the kitchen, got all new things in the kitchen, so it feels like a premium property. Put the barrel sauna in, got some better fire pit chairs and some string lights around the fire pit, got a lot better photos. And it took the revenue from, I think she did like 75K when I bought it. And it took the revenue from 75K up to 145K. So almost 2x the revenue with what I would call like light design refresh, amenity refresh improvements on that property. At that revenue, it cash flows, I think 20 to 25K in that range. So
I mean, really,
again,
for putting zero down,
yeah,
like that's a good return on your investment, really.
yeah, absolutely. Yep. And then, in the US, we have this tax benefit where you can depreciate a significant portion of that property in the first year. And if you materially participate in the property, which means you are involved in the management, you're spending 100 hours or more on the property, and no one else is spending more time than you. If you qualify it as a short-term rental, which means the average stay is 7 days or less, you need to check the boxes. But once you do that, you can depreciate it and then write that loss against your regular W-2 income. So in 2023, I still had an engineering job, a W-2 job. And so, I launched that at the end of 23, and then I was able to write down, I think it was 330,000 in losses in that year. And so that allowed me to basically, wipe out my income tax for that year. So that was another big benefit. Not only did I get the property for zero down, got some money at closing for the improvement cost, then also had the tax savings and then the cash flow on top of that. So yeah, that's where that's a home run creative finance deal. I think a lot of people who get into creative financing, definitely the cash flow is typically tighter because you're leveraging the property at a higher percentage. You're not getting a loan for 80%, you're getting a loan for 100 or 110% in some cases. So your leverage point is higher. So naturally your debt service costs are going to be higher. Your cash flow is going to be a little bit lower. So you have to factor all those things in. But if you step back, I like to look at the three benefits of real estate. I call them flow, grow, and keep. So flow is your cash flow. That's what everybody focuses on. That's the golden standard for a good deal. Grow is also a really important part of real estate. So you have equity that you're getting every year. Typically, on average, over the last 100 years, every 20-year cycle was a 4% gain in appreciation of the property. And then with a typical 30-year mortgage, you get about 1% in principal pay down. So I like to say you have about 5% equity gain per year. So on $1 million property, you're gaining $50,000 per year in equity. And then the last one is keep, which is the tax savings that you get. So flow, grow, and keep. Keep is the tax savings that you get. So I was able to get a reduction in taxable income by $330,000 and then redeploy some of that capital into future projects, which I did. I bought, 3 more properties after that. So that's where creative financing is very efficient for use of capital. It's tighter in the flow part of it, the cash flow, right? It's tighter. So you need to be able to withstand tighter cash flow scenarios. So it's not for everybody. I think a lot of typical buyers they're just focused on the cash flow. So they want to know every month I'm going to make money. I don't need to empty out my piggy bank at all. But we have a concept within our advisory program. We call it the Freedom Bank, where you actually are tracking how much money you're benefiting from buying real estate. So if you save 100K in taxes, that 100K goes into your Freedom Bank. Now, whether or not you actually create a bank account and put it in there, that's separate. We're tracking the total benefit from you buying real estate. But essentially that 100K goes into your Freedom Bank, and then you know that you had that benefit from buying that piece of real estate, and you can redeploy that capital into future projects as well.
I think that's a really cool concept, the Freedom Bank. I think that's something that a lot of people tend to forget when you're looking at real estate or when you're hearing people talk about it. It's always, like you said, cash flow, the equity and, appreciation, mortgage pay down. But a few people talk about the tax savings, because I don't think it's it's not as sexy as a concept. But really, if you can save $100,000 in taxes, sure, maybe that's not going into your bank account, but I'd rather not pay the government $100K and be able to keep it for myself and my family than, give it to the government where they, toss it away on God knows what at the time. So I think that's a really important thing for people to know, is just with certain types of real estate, you get better tax incentives, better advantages, like you just sort of broke down for us. For the person who is looking at creative finance, if someone's like, hey, you know what, I don't have a ton of capital to invest, or I can't qualify for the traditional mortgages, creative finance starts to become a bit more of an attractive, strategy for people for that first property. And even just today, like, what do you recommend for people to do to try to find a seller who's open to the idea of, seller financing, or subject to sort of what strategies are you using and how are you approaching these people today?
Yeah, for sure. So it's really a needle in a haystack to find a seller willing to do that, because as you can imagine, not every seller wants to let you take over their mortgage or wants to finance their equity and so on. The vast majority of sellers just want out of their property. So it's a needle in a haystack to find those sellers, which means it's a lot of calling. So we have a tremendous amount of calls per week. We do cold calling, and then we do warm lead processing, and then that all filters down into eventually a contract. But it's basically, I would say, much higher volume than what you would expect. So one person is calling about 10,000 people per month, 10,000 dials per month, and that can generate somewhere between 1 and 3 contracts per month. So it's a volume game, like a lot of things. And that's where the vast majority of people, when they look at what they do, where they're like, wow, you got that contract and you were able to sell that contract. That seems really easy to do. There's a lot more behind it. You need a team of people. We have a team of 6 people right now. 7 actually, including one of the acquisition people that we do. Plus we have several other people that are nearly full-time supporting the business, probably up to almost 10 full-time equivalents. So yeah, it's a tough business. It's very, very difficult. There's only a handful of groups that do it in the US for short-term rentals, which I think speaks to how difficult it is, because they're challenging transactions too. So we have a transaction closing team that helps to process it through the title companies and so on. So the transactions themselves are difficult. They have a relatively high failure rate. So you need to deal with fallout of contracts quite often. So there's all these challenges, but as with any business, you have to figure out how to solve those problems. And once you become good at it, that's where we offer that as a service to people to come in and take over those contracts.
So I think for everyone listening, hopefully you heard what he said about they do about 10,000 reach outs to get 1 to 3 contracts. So if you're someone who's been trying to find a deal and you've called 10 people and you haven't got one and you're starting to get frustrated.
Yeah.
There's a little bit of reality that it's like 10,000, to try to get one or two solid contracts in place. So that just lets people know just a little bit about what's involved in it. Alternatively, as Justin just said, you can also find people who are already doing this. Like Justin, he's already got his team of 6 or 7 people reaching out to 10,000 people every month or however long it takes to do that reach. I don't even want to know. I hated working the phones when I was younger, and I did some of those call center jobs in college. So, but you got 7 people doing it. So another alternative for people out there is to find someone who's already doing that, and then they're putting deals out that they've found and locked in. So I know I'm on your email list. It's one of the things that I think is really cool is I see what sort of deals you're finding and you're putting out and sending out to people. So that's an alternative as well for people who are listening. If you're really interested in getting into, short-term rentals, finding people who specialize in that and they're putting deals out like Justin's doing. I think I saw you just put one out earlier today or yesterday for a beautiful looking cottage in Hockatown, which I think is Broken Bow area as well.
Yeah, exactly. Yep.
And it was a beautiful cabin. So that's like an example of one where you had your team reaching out to a ton of people. They found a good opportunity and you're able to negotiate that. And I see with a lot of your deals, it's a lot of, there's the seller financing aspect, and then people are looking at getting their own DSCR mortgage on top of it. You want to sort of just explain what, if someone was looking to reach out to you to get a deal, because they didn't want to go call 10,000 people, because I know I don't. That's not something I'd want to do. So what would that look like if I was to go to you and be like, hey, Justin, I want a short-term rental in, Broken Bow or this area that you specialize in. I know you've got ones in Nashville and other great places as well. So if someone was like, hey, I want to work with you, what would that look like? Just so we kind of get a picture of that.
Yeah, for sure. And to be fair, 10,000 outreaches per caller is a fully optimized, multi-line dialer system with predictive answering and so on. So if you're getting started, like I was at one point, you can call 50 to 100 people a day and probably end up with one contract a month doing that. So not to discourage anybody out there who wants to give it a shot. Like I said, it is difficult, but we have mostly been doing wholesale deals for the last 2 years, and we are now doing some traditional purchase deals. We have ways of optimizing the traditional purchase as well, with also low down scenarios, and then focusing on amenities and design. So we have, from our wholesale side, you can join our list. You can see our deals come through. And if you like one, you can raise your hand. You can reach out to us and we can chat about it. There's no cost to do that. We also have an advisory program where there's an upfront program fee. And that's where we are transforming somebody from relatively low knowledge all the way through everything that I've learned for the last almost 6 years now, including underwriting or determining the cash flow and benefits of the deal, the transaction closing. We have partners for interior design and amenities to help improve the property. We do cost segregation studies for people, so we can offer that. And then we can either help you find a management company, or we have a small management company, depending on the region that you're in. We can manage the property for you or help you find one. So we basically walk people through from, a low knowledge point all the way through to becoming a knowledgeable investor, buying a property and having a lot of success, and shortcutting all of the mistakes that I made along the way and that most people eventually make along the way. So if you're interested in that, I think the best way to get in touch with me is on Instagram. It's Justin S. Thompson on Instagram, and we can have a chat, figure out if it's a good fit. Some people are focused on the wholesale side. We keep that open because there's two parts of wholesaling. There's the acquisition part where you're getting the contract for the property, And then there's the disposition part where you're finding a buyer for that contract. So you need to manage both sides of that. You can't have a fully optimized acquisition system without having buyers in place. So we need to keep that open to manage the flow of sellers and buyers. So that's open. If you do join the advisory program, we give priority access to the wholesale deals. So some of the best deals do go to the advisory clients. So that's another reason or incentive to join the advisory program. Not only the sort of done for you kind of hand holding through all the steps, but you also get access to some of those deals. And then in the advisory program, we also underwrite traditional purchases, which do typically have higher cash flow. They are higher upfront capital, but they're a higher cash flow deal, which for most first-time investors, that's what they're looking for, is a comfortable amount of cash flow that they know that this deal is going to be great for them. The creative finance deals are more for experienced investors that are trying to scale a portfolio, that are looking to raise capital, and creative finance is essentially a way for them to raise capital.
Okay, great. And then for the wholesaling side of things, say someone listening is like, I don't really have the capital to get into a property. I want to start generating some revenue myself. I know wholesaling is an option for people. Did you start with like getting into wholesaling? Did you make calls yourself, or did you sort of just build that out? If a person was looking to get more into the wholesaling side and just trying to be like, I have time, but I don't have capital, I'm just going to reach out to people. What would you recommend to someone who's in that starting point to be able to generate and create a bit of a business around it?
Yeah, typically you start out making calls. So, and like you mentioned earlier, I think the vast majority of people, they start and they make 10 or 12 calls and they're like, oh, I couldn't get one seller to take this concept or take over this idea of creative financing. So they quit. It's really a volume game. So I would start off making 100 calls per day, 5 days a week for 2 to 3 months. During that time, you'll probably end up with 1 to 2 contracts. When you get good at it, you can get 1 to 3 contracts per month with that same volume, and then potentially scale a business from there. At some point pretty quickly, you need to onboard cold callers. Typically, the skills for acquisition and disposition are different. So acquisition is talking to sellers, talking to agents, pitching the idea of creative finance. Disposition is talking to buyers or investors who need a different set of knowledge and basically a different way of persuading them to buy the property. And so that skill set is often different. So you typically need an acquisitions person and a dispositions person. So you'll end up with a cold caller, an acquisitions person, a dispositions person. I would partner with a transaction coordination company first. We offer that as a service externally as well. So you can partner with our company, or there's many different transaction coordination companies out there that do it. Eventually, once you get scaled up, you bring the transaction coordination in-house. So that's the basic team. And then you yourself can fill any or all of those roles for a period of time until you eventually scale up. But essentially, to be efficient, there's a few people, very few, that operate as solo operators. But I think to have sustained efficiency, you need a minimum of 4 people on a team to make it continuously operate. There's a handful of people. I would say I know of maybe 2 that are essentially solo operators that do all of those pieces of the business. But the biggest thing is you need to be good on the phone. You need to make hundreds of calls, 100 calls per day for 2 months to figure out if you're going to be good at it or not, which for most people, that's like one of the worst things in the world to do. So that's the barrier to entry. And if you can overcome that, you can become good at it. So there's definitely opportunity out there. I don't want to say there's not, but I will say again that there's only a handful of groups that do it, which speaks to how difficult it is. And one of the biggest challenges is if you get a property under contract and you get really good at acquisition, and now you have a defined time period where you need to dispose of that contract with disposition. If you don't do that, the seller gets upset, everybody gets upset, you lose the contract, you lose your reputation in the market, and things start to spiral. So it's kind of a momentum-based business, I would say, where when you have good momentum and you can move properties quickly, people in that market know about you, they bring you properties, and you can have an efficient marketplace. If you start to lose contracts and you can't find buyers, you spiral, and then your reputation in that market is shot. And that's where it becomes like a really challenging business because it's very much like momentum based, I would say.
And say someone's willing to make the phone calls, not shy to get on the phone and be like, sure, I'll just hammer away because, I really want to make this happen. Two questions. One, what would be a good sort of wholesale fee? I'm sure, an assignment fee, I'm sure it can differ depending on the property type, but in general, what would you say for someone who's maybe thinking about getting into this? Like, what is something that a person could make off of, one of these deals?
Yeah, it's similar to I would say a buy-side agent fee. So it's somewhere in the range of 3% to 5% of the purchase price. I would say average is around 3.5% in that range. It's like I said, there's a lot of costs that go into it. The acquisition cost to get a contract includes the, hiring people to do calling, hire people to do closing, transaction coordination, the disposition side of it. So there's several humans involved there that are eating up a chunk of that cost. So, it gets reduced fairly quickly, but yeah, it's in the range of 3 to 5% of the purchase price.
So really, if you're finding some of these higher end, Airbnbs in certain markets, there's a lot of potential to make 10 grand plus off of a deal. It sounds like if you can, find a good solid deal. What tools do you recommend for someone who maybe was looking to get into wholesaling? What are you using to help, skip trace or find the deals? Is there any tools that you recommend for someone?
Yeah, there's a number of tools. We have data guys that pull data sets for us now. So it's like a custom workflow where they look for existing Airbnb owners. So we start with AirDNA as a tool. So we extract data from AirDNA in terms of the listing link and the GPS coordinates. And then right now we do a low-cost labor manual translation from the GPS coordinates to the address. From the address, you can then skip trace it to the owner's name, or potentially, in a lot of times they're owned in LLCs, so you get the LLC name. Then you need to do data enrichment. For skip tracing, there's many options. You can use PropStream, charges 12 cents per skip trace. There's several other of them that you can get a little bit cheaper if you do higher volume, but I think most people start with batch leads or PropStream and do it that way.
I think that was a great breakdown. I'm not too well versed in the wholesaling world, so I always love hearing what tools people are using, how they're doing it, because I do think it's a great way for beginning investors or people with low capital to get their feet wet in the real estate industry. And I think what was really cool there that I learned from you was just using AirDNA to sort of get a location of where people are and then finding out how to skip trace so you could actually focus strictly on people who are owning, Airbnbs that are, I'm sure you're also looking for, Airbnbs that are poorly optimized, bad photos, things like that, because, maybe you got a better chance of, finding someone who's bleeding money on a deal, and maybe you can go in there and, create a win-win scenario. So I think that's a great thing too for people who, even if you're not looking at getting into wholesaling itself, if you're looking at just building up, your own portfolio of properties or Airbnbs, using some of these tips that Justin just said, it allows you to try to find good potential, opportunities to find one of these deals and be able to come in and look at negotiating some sort of creative finance or seller finance deal to grow your own portfolio with, limited capital, which I think is great. And it's an important thing to know. I kind of want to look at talking a bit about the Airbnb market itself, because I think a lot of people are always interested in Airbnb because you get your own sort of vacation home. They can generate a ton of revenue because you're really focused on that. I know you do other stuff as well, but I just wanted to get your opinion on what are some of the key markets in 2026 that you think are really good areas or markets for people looking to get into Airbnb investing.
Yeah. So for creative financing, it typically gets consolidated into specific regions where it's partially to fully saturated. You have sellers that are trying to sell, not a lot of buyers. You have low interest rates from recent purchases within the last 3 to 4 years and relatively low equity. When all of those things align, and then that coupled with the sellers need to be interested in seller financing, they need to have a business mindset, they need to have their own, comfortable with their own financial situation so that they can finance their equity. When all of those things align, which is truly a needle in a haystack, those consolidate into specific regions. So for creative financing, you're often kind of giving up regional preference in order to get those creative deals, which is one of the reasons why we're also focusing more on traditional financing, because with traditional financing, there are markets that it works really well in, but you have much more flexibility to pick a regional market that's near your home, that's 3 hours drive away, that you can treat as like a second home hybrid if you want. The last property I just bought is on the west coast of Michigan. It's 3 hours from my house. And, I have 3 properties in Broken Bow, Oklahoma, 1 in Florida, 3 other properties in Michigan, including that one that I recently bought. So I kind of have a mix of like fully optimized creative finance deals and then a few that are near my home that my family also uses. We've spent the weekend before last in on the west coast of Michigan. We have a balance of those. The markets are important, but what's much more important than the market are specifically the amenities of the property, and then the design, and then the marketing of the property, and the pricing, and the operations. So all of those things, if you can fully optimize those 5 things, you can become good in almost any market. If you add on top of that a market advantage, then you can do really well with cash flow, grow, and keep. So it kind of depends on the individual, whether or not they're looking for something close to their home and they want to optimize that, or if they're really looking throughout the U.S. We've seen that, I think for the first one, people tend to do well when it's near their home and they take a little bit more personal pride in it. We look for anywhere from a 15 to 20% gross yield potential, which is the total revenue per year divided by the purchase price. So an example of a 20% gross yield would be a $500,000 property that earns $100,000 in income. That property will typically cash flow 5 of that 20% will be cash flow, between 5 and 7%. So the cash flow of those deals can be quite good. So in order to get that, you usually need a bit lower prices, a bit higher revenue. So we look for markets that have those scenarios in them. They're usually submarkets. They're usually 2 to 3 hours drive from a large metropolitan area. That's typically a regional vacation spot where people are driving to that regional spot, where the prices haven't escalated in the last 5 years. So there's quite a few of those regions where the prices have escalated, but you want to look for ones where they're relatively modest escalations. In Michigan, there's quite a few regions. That's where I'm from, in Michigan. There's quite a few submarkets that fit that potential, where you can buy a $500,000 or $600,000 property and make 100 to 120K in revenue per year.
Outside of the location, what are the top amenities that you would recommend to someone who is getting an Airbnb set up that you think would drive the most, value?
Yeah. So value in terms of return on investment. Yeah. Return on investment, there's a few unique ones that give you really high return on investment, which is the return divided by the total investment. Some of those are somewhat obvious, but like string lights, for instance, I believe have the highest ROI, return on investment, of any amenity, because for a couple $100 you can put those in and you can get a 10K or 15K per year more revenue with that amenity. Beyond that, the higher cost, which still have a high ROI but relatively low ROI, are things like barrel saunas. I really like barrel saunas. Pools are still the GOAT of amenities. So in some regions, you can get pools for $50,000 or less that will give you 30 or 40K per year more in revenue. And another one is a pickleball court. You can get pickleball courts for 30 to 60K. And again, they'll give you another 30 to 40K in revenue. So a lot of the creative finance deals that we've done, because they're generally lighter in cash flow out of the box, they work really well with a big amenity like a pickleball court or a pool or barrel saunas. So a lot of the people that worked with us to get properties, they put in things like the pickleball court. We had one guy put in a batting cage. People put in mini golf at their properties. So when combining creative finance and those big amenities, they did really well because those amenities boosted them to a point where they're cash flow positive. And then it made the structure of the deal that much better because they had low entry cost originally to get into the deal. So yeah, I would say top big amenities for me are pool is number one, pickleball court, then sauna. And I'm kind of eliminating hot tub. Hot tubs are pretty much, you almost need to have one in almost every Airbnb now. And then for low cost amenities, I think string lights. I use a lot of solo stoves that photograph well in the properties for fire pits. So really nice fire pit exterior setup. Mini golf, I would still consider relatively low cost. You can get those for a few $1,000s. And sauna is kind of like mid-range. You can get those for anywhere from $6,000 to $12,000 installed. Those are all really good amenities. I mean, at the end of the day, you're competing on a platform, Airbnb, you're competing for eyeballs. You need things that are going to attract people to click on your listing. So typically the outdoor amenities are what gets people to click when they see a really nice fire pit with string lights and a barrel sauna and a hot tub. They're going to click on it. The more clicks you get, the higher bookings you get, the more revenue you get. So that's the amenity game.
Awesome. I've never put in a barrel sauna before, but you got me really thinking about it now. I'm like, I should probably add one of those into a few of our properties just to up our backyard game. People always say your backyard's one of your top amenities, so you kind of got me sold there. I think I'm gonna have to add them into a couple of my backyards.
They're much lower maintenance than hot tubs too, so that's really nice. There's still a bit of maintenance, but relatively speaking, they're pretty easy. It's pretty much the upfront cost, and then you do have to clean them out every turn, but it's nowhere near as difficult as maintaining a hot tub.
That's great, Justin. I really appreciate you taking the time to talk with me today. I think some great takeaways I got were just some key amenities for Airbnbs, which is always good. It's always good, especially for someone who's already running a multi million successful Airbnb business, to hear what their perspective is and just, see what I can do and anyone else listening can do to improve. I really love what you're doing with the creative finance in the short-term space. I think it's really unique. I love seeing what sort of deals you're finding and what you're putting out there. For anyone listening, if they wanted to get on your email list or get a little bit more information about some of your communities, where could they find more info about that?
Yeah, the best way is to reach out to me on LinkedIn. It's Justin S. Thompson. I have conversations with people there all day long. Or if you want to go to our website, it's gathercircle.com. You can sign up for our email list and get more information there.
Thanks a lot, Justin. And once again, go out, follow Justin on social. I love what he's putting out. His content, very inspiring. It's always good to learn from someone who's actually taking action and doing stuff. Justin, thanks again for your time. I really appreciate it. And I'll see you guys in the next podcast.